Federal Reserve Chair Janet Yellen has made some very interesting comments over the last few weeks regarding the timing of the first rate hike. Now, the Fed seems to be weighing up the risks of a premature move regarding also waiting too long. Now, joining me now is London Capital Group market analyst Ipek Ozkardeskaya. Ipek, thank you very much for joining me. Now tell me, what's the most important thing here? Is it the timing of the first hike, or is it actually the pace of normalisation?
Previously, we were looking at the timing of the first rate hike. Now we are just mostly looking at the pace of the normalization. We have seen that the market has taken it quite negatively or dovishly, the fact that the Fed may not proceed with its first rate hike before the end of the year. This is why we have seen and we have heard Janet Yellen saying that the asset prices have gone too high, and also the fact that the rate hike might happen before the end of 2015, where the market has restarted pricing in the first rate hike before December. It was 50% last week and it's 55% after Yellen's speech this week. And at this stage, we are looking at mixed messages from Fed presidents, and we can just observe that the pace of normalization is not a sure thing, is not a done deal. We have heard in March that the Fed may normalize twice slower than what we thought previously, and that is basically what's going to happen. So the first rate hike might come before the end of the year. However, following the first rate hike, we are not sure that it's going to be a hawkish move. It's going to be a policy normalization that is expected from the market. It might not be satisfactory for all these Fed hawks and might stay too subdued, or it might still stay a very expensive monetary policy from the Fed.
Okay, moving away from the US and the Fed and kind of moving back over to the ECB and the Eurozone, so to speak. Now the G7 meeting, that kicks off today over in Germany. Again, the Greek political saga is going to very much remain on the agenda, as it's obviously in the spotlight at the moment. Now, I mean, is there anything interesting we should be looking out for over the next few days in regarding Greece and kind of the implication perhaps in terms of the euro over the next few days?
Okay, so Greece will be paying on June 5th the pension funds, the pensions, the salaries, and also the IMF. So Greece has to pay 308 million euros to the IMF on June 5th, but also 347 million euros on June 12th, 578 million euros on June 16th, and another 347 million euros on June 19th, which means... Is it realistic? That's the question. So if Greece has the money to pay on June 5th, that does not mean that we are done with this issue. So the tighter conditions and even tightening conditions, the liquidity conditions in Greece might not permit or might not allow the country to keep up with the pace of these repayments. This is why we think that the issue of the Greece has not ended yet, and the month will be determinant, because we have seen a large amount of deposits going out of the country. The ECB is funding the Greece right now through ELAs, but the collateral is running out, which means that in about 2 weeks the collateral will be flat and Greece will no longer be able to be funded by the ECB, and that's where Greece might face first of all, an exit from the Eurozone, from the Eurozone, and also a systemic crisis within the country. This is why we are just now talking about the potential exit of Greece from the euro. Is it negative for the euro? It's not really negative for the euro, because euro is a basket of 19 countries which all have different performances. So if you're taking away the most negative performance, that might mean that the total performance of euro will be positively impacted. So fundamentally, the euro might be worth better than what it has been, with including Greece into it. So this is the question of the most popular question at the moment. This is why we do not see euro traders selling off the euro on Greek issues, but rather on a possible risk of contagion regarding the Spanish situation. However, the Greece is completely out of the game right now.
Okay. Well, what about the Bank of England? Sorry, the Bank of Canada, I should say. The Bank of Canada have their rate decision later today. That's expected rates remain at 0.75%. So the most important thing here, it will be tone, will it not?
Well, it will be, because Paulos has sounded very optimistic over the last weeks, actually, regarding the Canadian recovery. He said that lower oil prices had a faster impact on the Canadian economy, yet not larger. We think this is too much optimistic, but the fact that the Fed is moving into a dovish camp gives the BOC the possibility to maintain its rates at 0.75%, while giving a more hawkish tone, just to make sure that the investors do not expect for an additional stimulus before investing, but they invest today, so to move the things as quick as possible.